Hey traders, Chatting Man Dan checking in on things post CPI reaction this morning. The reading came in at 5%, which was a bit below expectations, but we still sold off a bit of a sell the news reaction. And heading into the morning, there were definitely a lot more bearish setups that had good risk and reward versus bullish setups because of that initial push up. And there are a number of them: Netflix, NVDA, AI, all these names were looking to set hourly lower highs compared to the highs of yesterday, even with that strength. And we also had Apple, Microsoft, and Amazon, our most important NASDAQ names, all rejecting from their high of yesterday first thing on the morning. So with that, we had a gap up open, pretty much considering SPY a double top at this point, 411.92, 412.17. So a double top by 25 cents. The big thing is the low of Thursday. The NASDAQ broke support today. Now the S&P 500 has to break 405.68, which is less than 1% away, have to break that to follow along and to have multiple sectors showing weakness, because what has been keeping the bulls strong over the last 3 weeks has been rotation. The NASDAQ drops, the financial sector and healthcare go up, and vice versa. So the question is, do we see all sectors dropping together? We've got the NASDAQ breaking. Again, it just barely broke. Into the end of the day here, we broke support by 30-some cents. So breaking the low of Thursday, technically weekly consolidation is now underway. I will be looking for a weekly higher low compared to 284.75, but the stair-step pattern of the last 4 weeks or last 3 weeks has now broken. So a little bit of a shift is underway. SPY has to follow. The simple statement is, if SPY does not break 405.68, the NASDAQ bears are not going to get much follow through. But we had a nice 5-minute rising wedge. In the video yesterday, I talked about the afternoon 5-minute rising wedge on QQQ into the end of the day. That was the hourly lower high being set. Some people like to tell me, if you're trading with patterns, you're a novice. It's all about reading tape. Trading with patterns within price action trends is a game changer in terms of looking for the most likely scenarios and then pinpointing them with short-term patterns. I'm trying to find the post where I was talking about the similarities. There it is. So then into this afternoon, QQQ is reminding me of yesterday. Low of the day was set a bit after 11 a.m. 5-minute bounce grind up on the afternoon. Yesterday was a 5-minute rising wedge to set the hourly lower high into the close, keeping an eye out for similar. So at that point in time, we had then just made this bull break with a lack of follow through, and then that marked the high of the bounce. Hourly lower high was marked by a 5-minute rising wedge. We then had the FOMC minutes add a bit of volatility, but overall, that was the point for the bears. And I used that to add to my NVDA short. So SMH, we've been watching this head and shoulders try and develop. It has to see a bear break of 249.28 to confirm it, and then we've got to break 246.43 to follow through. And so I was using this setup for NVDA as well. I've been in the short since last week. I scaled out some position to put my break even around 280, and then I added back today because I saw things that I wanted to see from the bears. Same head and shoulders setup. Bears must break 263.95 and 258.50 to follow through with this pattern. The first thing that got me interested in this pattern was NVDA divided by QQQ, giving us relative weakness. This was the first day I got interested. And so now we need to see this continue a daily downtrend as well. But I used that, and I made a Twitter post about this. I used that NASDAQ 5-minute rising wedge to look for this NVDA hourly lower high. And I added back to my short right around 269 on NVDA. And I was watching this 5-minute head and shoulders as my reason for entry. And I made my entry right here. And I put my stop at 270.01. And then I thought to myself, this is a zoom out moment. I should leave wiggle room. I moved my stop to 270.21. Just extra 20 cents. It kept me in the position by 4 pennies. And the difference of, I risked an extra X dollars, and it's now given me, an extra 20 times what that little bit of risk was. So that's the difference between feeling in the flow and being in a lack of flow. If I'm not in a lack of flow, I leave my stop at 270.01 and I say, darn, I stopped out right at the high I just missed. Got to leave wiggle room. And maybe it's just observing things, but it seems to me the last 5 years of my trading career compared to the first 5, stops are getting triggered on horizontal support and resistance more than they were. Maybe that is the market's response to more people using technical analysis. Either way, got to use wiggle room. So NVDA, I'm comfortable in this short now, but I won't be calling it a success unless we take out both of these levels. And then my first target is weekly EMA 12. My bigger target would be monthly consolidation after 5-month stair-step pattern up. Because I'm anticipating a 4-month lower high is more likely than an all-time high. But we'll see. We're going to take it one day at a time as always. But so far shaping up well. Tesla, huge bearish engulfing candle today. Very weak. You could just see the relative weakness all day, specifically here. Low of the day is hit at 11:30, and look at this bounce, rejecting from 15-minute EMA 12. What does QQQ do at that point in time? Low of the day is at 11, so Tesla dropped for an extra 30 minutes before it hit the low of the day, and then QQQ got over EMA 12. The bounce was much more significant. Just easily able to recognize relative weakness. Today was a banger in the chat room as far as giving some nice informative posts. So you could just see the relative weakness. Tesla bounce, much weaker than most. 15-minute EMA 12 resistance, keeping a lid on things. And we stayed relatively weaker for the rest of the day from there. So weekly consolidation. Again, anticipating we're going to stay tight on the weekly into earnings next week. But now it's all about 176.11. We knew the daily lower high was the most likely result of this bounce, and we certainly got it today. Healthcare, bulls definitely getting a bit tired. Higher highs, and definitely the stronger sector today. But some upper wicks recently. Again, keeping an eye out for weekly consolidation. If you're a broader market bear, you want to see XLF, XLV, and QQQ all enter weekly consolidation together. And so, 2 days left to go. Maybe we'll get a bearish reversal candle on the weekly here. Stair step up the last month. Just a little bit of tiring bulls. XLF, daily trend change confirmed. I said yesterday, if we have a red day today, I'm going to call it a confirmed trend change with no follow through. And so that's the case right now. We know a weekly lower high is the most likely result of this bounce. So we're keeping an eye out for potential weekly consolidation here as well. KRE, daily lower high is set, rejecting from EMA 12 resistance. Bears keeping full control. New short-term resistance here, 43.46 for full bear control. Looking back down to 41.45 and 41.28, our fear lows. Regional banks, easily still one of the weakest sectors out there. There's a lot that I want to talk about. Meta's got a potential 4-hour rising wedge. A lot of resistance at 216. Netflix was a great short setup this morning. We know a weekly lower high is the most likely scenario on this bounce. It's a potential head and shoulders big picture. But we know a weekly lower high is the most likely scenario. So we zoom in. We see yesterday, that's potentially our daily lower high. And on any morning bounce, we're scouting an hourly lower high compared to the high of yesterday. That was one of the highlighted trades from pre-market and just following through really nicely. Hourly downtrend confirms, daily lower high set. Daily downtrend confirms, weekly lower high set. Just a really beautiful example of how our different time frames all overlap each other and give us information on the longer term time frame. The hourly gave us daily info. The daily gave us weekly info. Riot, nice day for the bears finally. You can see the weakness start right here in correlation. I've been watching Riot very closely the last 3 days, and it's had a bullish correlation to QQQ the whole time. Right there on that 5-minute candle at 10:15 in the morning, that started to change. And we started to see notable relative weakness, big drop down. Didn't quite get to 5-minute oversold conditions, but again, great volatility in both directions. We ended up with almost a 10% drop and then a 5% bounce. Daily bearish reversal candle. Bears will have to confirm an hourly downtrend by breaking the low of today Bulls defended the low into the close, have to break 1195 tomorrow for daily consolidation to be underway, and then we will scout a daily higher low. AI names. So AI was another lead bear watch for today, this morning, because we had a ton of space for an hourly lower high to be the result of any morning strength, and we knew a daily lower high was the most likely scenario. But GFAI, huge breakout. Up almost 100% today. It did go 100% today. This name is definitely on the volatility menu. Plenty of volume. Traded $600, $700 million today. It was just a beautiful 15-minute EMA 12 support guide. This was an hourly bull flag that confirmed. So going to be great volatility in this name in both directions. But a quick 1,000% move off the lows from a month ago. Crypto stocks and AI names have been my day trading bread and butter. Every year it's something different. Prior years it was Tesla and NIO. Prior years it was cannabis. This year it's very easily crypto and AI are my day trading go-tos for volatility on a daily basis. And then there's periods where I chill out and don't trade them because they're tightening up, and then they expand their range, and then it's time to trade them again. And that's where we stand right now. Watch the VIX. The VIX held our support zone. You sure about that? So we held our support zone, and we got to break 2008. We rejected yet again today. If we see all major sectors at the low of the day at the same time, within the next day or two, the VIX will break bullish and have a big green candle. But that has to happen. Today, healthcare closed flat. So we didn't have all major sectors dropping together. That's the next checklist for the bears. They really want to see that for a convincing shift in momentum from the last month. Gold, daily higher low set, EMA 12 remains the guide, but we did double top. Bulls got to be a little bit cautious. We know weekly consolidation will be inevitable eventually. So if we drop down and break 1981, we will confirm a daily downtrend. Silver got a nice bull break. So silver and miners continue to lead the way, although miners still holding on, even with the broader market weakness. There will be a time to look short on metals and miners, but I am going to prefer scouting the weekly higher lows in those metals and miners. But just stick with the daily EMA 12. It's just such a good guide over the last few weeks. And I may be itching to, I want to try and short. My simple statement is if daily EMA 12 is support, not looking short on these names. Oil finally broke our sideways range bullish, battling the 81s, clearing the 81s, and quickly going multiple percent over the 81s. So daily bull flag confirmed, and now our long-term resistance zone is trying to break bull as well. Longer term. If we clear 83.04, which we did today, that's the highest level for oil in 4 or 5 months almost. Energy sector, not benefiting as much. But oil 4-month higher low, certainly looking set. Right off EMA 12. Natural gas, daily consolidation. Bulls just can't get a break. We'll see if we can confirm a daily uptrend. We haven't had a daily uptrend in many months, so that will stand out the first time we get it. But, I've been watching natural gas. I haven't really traded it in years after it was my biggest loser maybe 3-4 years ago. I just said, man, I'm not going to trade it anymore. And everything that I'm seeing here is keeping me in that boat. All right. Hope you had a good day. SPY needs to break support. NASDAQ bears won't follow through. NASDAQ bears want to see weekly consolidation, bears in general, weekly consolidation in XLV, XLF, and QQQ all taking place. If that happens, the VIX will be breaking bull into a weekly bounce. The dollar will likely be setting a weekly higher low. It's definitely struggling. 182 cents. Doesn't have to happen with the dollar, but that would just be ideal. Do good things. Turkey's taking a bath. Well, they were. Dust bath. A lot of people that don't know how that's how birds take baths. They think that it's an injured animal when it's doing it.